Hey, what's up YouTube? This is Leo with DRIPCalc, and today I'm making some moves in my portfolio. So the moves are, I am selling out of Altria, and I'll tell you why. And I'm buying, for each share of Altria, I can buy a share of Palantir and a share of TSLY, and I'll have a couple of bucks left over, and I'll have a higher dividend and a growth stock on top of that. So let me tell you all about it, and let's begin. But before we do that, real quick public service announcement, guys. Please smash that like button and subscribe to the channel. That really helps my videos show up on YouTube. We have a small channel and we're trying to grow, so when you subscribe, when you smash that like button, it really helps us grow. So with that said, let's begin. So I will be selling my MO stock, or Altria, and Altria has been on a tear lately. This year it's up about 22.5%. If we look over here, year to date, 22.4%, and it actually hit a 52-week low in October at 39, but then in March it also hit 39. So in March of this year, so about 4 months ago, it hit a 52-week low, and now it's at 52-week high. Now, here's the thing: MO, or Altria, is a company that doesn't really have any growth and will not be growing anytime soon. In fact, if we look at revenue, in the last 2 years, the revenue is declining. Now, over the last 10 years, it's up by about 1.46%, but basically it's flat. It's not going anywhere. And if we look at this chart right here, it's very interesting. The first quarter of the year is always the lowest for this company. And so we look at Q1 of this year, $4.72 billion. Previous Q1 of 23, $4.76 billion. So it's high. It was higher a year ago than it was this year. So if we go back 2 years, for that 0.82, again higher, 4.88 in 21. So it continuously going down. Now they had a really good quarter over here in Q3 of last year, and this year's Q3, or rather Q2, is also supposed to be pretty good. Now the expectation, if we scroll down a little bit over here, the revenue is expected to be about 5.38 billion. So this is the quarter that they will be announcing in a couple of weeks. Yeah, July 31st, they should be announcing their quarterly results. And also, because MO pays their dividends in 4 quarters and then raises every year around Q2. So right after they announce results, a couple of weeks later, they announce a dividend increase. And I will actually make a separate video about it. But last year they increased by 4 cents, so from 94 cents to 98. Previous year they increased by 4 cents. Year before that they increased by 4 cents. And then in 2020 they increased by 2 cents. Anyway, I think this year they will increase either by 4 cents or 3 cents. So that's my guess, and I will make a separate video about that. But essentially this company has no growth. They have a lot of debt. They have a cash pile that's slowly diminishing, but so is their debt. They're paying it off slightly. Now the good thing about MO is they're buying back shares. So you can see right here, share buybacks, about 1.25% per year over the last 10 years. If we look at the chart, it's going down, so that is good. But also the shares have been kind of depressed. Okay, this is the revenue breakdown by product category. But anyway, the interesting part here is the future revenues and future incomes. So the analysts are projecting that EPS this quarter will be $1.34. Last quarter was $1.21. And with their dividend being just about $1, that is a pretty high dividend payout ratio of over 80%. Now, their goal is to pay the dividends to their shareholders, so they actually state that as a goal, pay as much as about 80% of the net income. So they're right on point over here. But with basically flat revenue, I don't see a point of holding this stock any longer, especially that it's at 252-week high. And yeah, they were over here at like 55, and like 6 years they were at $60, but I don't think they're going to $60. Like, there is no growth for this company. The Juul was a big fiasco, and even though FDA has allowed Juul to sell again, those are all unflavored, and I'm not even sure if MO or Altria still holds a position in Juul. They actually sued Juul a few months ago. So I guess they got rid of their stake, and then they sued Juul for whatever it is. But bottom line, it's a company that's not growing. Like, negative revenue over the last 2 years. Maybe it will flatten out, but you can see a clear trend that it's going down. The problem is that people stop smoking, and you know, as fewer and fewer people smoke, the only thing they can do is raise prices. The price increases are insane. I'm actually a smoker, so I know firsthand how much the cigarettes cost. Anyway, so this is why I'm selling MO. By the way, I'm up 37% on my position, so I'm not losing anything. Now, what I will be buying with the money that I will collect is very interesting. So first of all, I will buy Palantir, and I will make a separate video about Palantir, why I like this company. So if we look over here on their metrics, they're up 200% since IPO. So IPO was in 2020, about 4 years ago. So if you bought at IPO, you're up 200%. If you bought over here, you're still down. However, this is a company with amazing growth and a lot of potential, which is being realized. Look at the cash pile, cash and debt, like there's virtually no debt, a lot of cash. Revenue growth at 21%, and they're shooting for 25. Like they just closed a lot of new contracts during this quarter, and it will probably start to show up on their balance sheet and their revenue reports this quarter or next quarter. Now those contracts, one of them is the government contract for Titan military equipment, and I forgot what it is exactly, probably anti-rocket, but it doesn't matter. They won that contract from a big defense contractor. So that's like $500 million right there, and they already received a big chunk of that contract up front. So that should show up on this quarter or next quarter. And they also closed a lot of smaller contracts, and they're doing the AIP boot camps. So their sales pipeline, it kind of takes a while to get a client, but once the client is in, they love the product and they stay and they recommend it to others. And so the sales pipeline is filling up, and those numbers will start showing up in their results. And also then Ives yesterday put the most bullish target on straight $50 within a year, so 12 months from now, and that's amazing. That's like almost 100% upside from today. Now the stock did run up. Okay, if we look at the price chart right here, it was at 21 just in May, and by the way, I bought some leaps back then for $13, so I basically paid $2 premium to the price at the time, and now those leaps are printing money. And now the price is at if we disregard this 21 area, the prices are on the tier, and they're up about 65% this year alone. Anyway, so that's Palantir, and this is a growth stock. This is for the future. Now you don't make money on the growth stocks because they don't pay dividends, whereas Altria pays you dividends, really nice dividend. Now my yield on cost is over 10%. However, because the price ran up, they're paying only 8% right now. Once they raise the dividend, it will probably be a little bit higher, but if the price keeps going up, then the yield will drop. Now the thing is, like, I really don't see a reason for Altria stock to rally 25% since March lows. Like, there is no significant market news for this company, so they're just going up in solidarity with S&P 500, and I think it's bad. It's not a smart financial decision to pile into MO just because it's rising together with the rest of the S&P 500. Fundamentally, this company is not growing. Yes, it's a good dividend payer, and so to offset the dividend loss from this sale, what I'm gonna do is I'm going to buy TSLY. So TSLY, it is a yield max fund, and it's actually down significantly since the inception. Even with dividends reinvested, it's down almost 20%. However, because the share price is down right now, you're essentially getting it at a much lower price. So this is the TSLY dividend history. Now over here in January, they had a reverse split, so these numbers, they should be updated. I'll contact my data provider, so this number should be double. They should be adjusted for the stock split. But anyway, right now TSLY last dividend was $1. Okay, so that's higher than MO's quarterly dividend. Now TSLY cost almost 3 times less than Altria, but it's not even that. I don't expect them to pay $1 every month going forward. So even at like 65 cents, which they paid over here throughout these 3 months when Tesla was really down, even if you like combine that, that's basically $2 in 3 months, whereas Altria pays $1 every 3 months. So for 1/3 the price, you get double the dividend. So that covers my dividend cash flow. And then on top of that, I get a share of Palantir, basically a growth stock, and I will probably go ahead and sell a call option expiring in December. I will collect almost $2 on a $40 call. If I get assigned, then I'll make like $13 on each share, actually more. So you get like $1.70 per share right now if you sell the call. So that brings your price to about $27, and then you get, if I get assigned at 40, which is amazing. If Palantir runs to $40 by December, that's amazing. So I will make like $14 and and some change, and that's essentially 50% return in 6 months. Okay, and if I don't get assigned, I'll keep selling covered calls, so that increases my income. And basically for each share of Altria, I get a share of Palantir, a share of TSLY, and then I have some money left. And so maybe I will mix TSLY and YieldMax or YMax fund. So that's a fund of funds. Basically it owns all the other funds that YieldMax has, and it basically compounds the dividends from all of them and pays them out. Now their dividends again are about the same as TSLY X last month, because last month TSLY paid $1, but so essentially YieldMax, YMax is paying about 65 to 70 cents per month. Again, when we combine that into a quarterly payment, that's about $2, again twice as much as Altria, and for a much lower price. So that's my plan. I'm gonna execute that right now. It's 9:32, market is open. I'm going to sell my Altria and buy Palantir and either TSLY or YMax or a mix of the two. Sell some cover calls going right away, and I will be in a positive. Again, I'm up 37% on my Altria position because I was buying at the dips. And again, guys, I don't think that Altria that anyone should be buying at $49. Like, there is no growth for this stock. It's going to stay flat, and it's a good dividend payer. I'm not saying it's a bad stock. It's just like in 4 months it ran up 25% with basically no improvement in the underlying business. So it's completely insane buying this stock at $49. At 39, I was buying a few shares, not a lot. Like even at 39, I wasn't buying a lot. At 49, I'm selling, I'm getting out of it. And if it drops to 39 again, maybe I will get in, maybe not, I don't know. But I don't think there's a lot of growth in the stock. Again, if we look at projection, at estimates by the Wall Street analysts, basically there is no growth going forward. There's a little bit of EPS growth because they're buying back shares, so there's fewer shares on flat revenue. Therefore, the EPS will grow a little bit, the EBITDA will grow a little bit, but essentially there's no growth in the stocks. Now they do have really good margins because basically they're growing the tobacco and putting pesticides on it, so it grows faster, and then they sell it. Good net margins, 45%, 34%. It's all over the place because some quarters they actually report losses, like over here, and this was, I believe, a Juul problem. The Juul thing, when it came out that the FDA prohibited Juul from selling their flavored tobacco products, and so basically Altria took a huge loss over here. They invested somewhere around like $14 billion into Juul, so it was a huge money loss. Anyway, yeah, it's not a company that's losing money. It's just not growing, so investing in it makes no sense. Whereas Palantir, look at the projections, guys. It's up and to the right. Look at the net income projections. And now these are conservative. Actually, I'm thinking that Palantir will grow a lot faster than that. Like, yes, they grew 25%, 21% on the revenue. This is 1 year. So you compare Q1 of 24 to Q1 of 23. That's a 25%, 21% increase. However, I think they will increase their growth. They're signing up a lot of new clients. You can see here they became cash positives, gap positive about 5 quarters ago. So now they qualify for S&P 500 inclusion, and that means when companies get included in S&P 500, usually their stock rallies by 7 to 10%. So that's another catalyst for them. So every 3 months, S&P Commission reviews companies to add. Look at the free cash flow; it's rising. Now they do have a lot of dilution. If we look at this chart right here, the dilution is getting smaller, so that's a good thing. However, its last quarter was pretty unsightly, where free cash flow was the same as stock-based compensation. But guys, this company is a growth monster. You know, you look at it, you're buying the future. You're not buying today's earnings, because today's earnings are what, 8 cents a quarter, 4 cents a quarter. That's GAAP, 8 cents a quarter, non-GAAP, and that's what is being reported by Robinhood over here. If we look at Palantir, so if we look at Palantir, yeah, see, they report 8 cents per share, and that's non-GAAP. Regardless, I think they will beat it because they beat it almost every quarter, and their sales pipeline is doing great. So the stock is down a little bit today, like a couple cents. Yesterday it was like at almost $30. So if you think of it that way, I think I'm getting a deal. Like, yes, it's overpriced, and yes, I have a position, like I have leaps that will effectively secure me a $23 price, and but I'm gonna keep those leaps, let them grow. You know, they're a couple years away from expiration, So I'll let them grow and just get rid of Altria while it's high, while it's hot, and get TSLY and possibly some YMAX and Palantir. Okay, guys, thanks for watching. Again, this is Leo with DRIPCalc. If you want to try out our software, we're offering a 30% discount for YouTube subscribers. That deal is going away soon, so don't miss your chance to try this software. And by the way, we have another part of the software that's super interesting, and that's Compare Stocks tool, where you can compare different companies side by side. For example, here is Altria versus Philip Morris International. Now, they used to be same company, one company. If you look at price chart over here, all time, so see this huge drop. That's when they split, and Philip Morris International became its own company. And so if we look at this comparison here, so if you invested in this company 10 years ago, that's post-split, you're basically flat on both of them. They're about the same return. Altria returned a little bit better. It was a lot higher returns over here, but then the Jewel fiasco happened, and now they're climbing back up. Now, in 10 years, 117% is kind of weak for both of them. If you just get a CHD, you get a much better return. Let's take a look. A CHD, 10 years return, 189%. So yeah, if you just got a CHD 10 years ago versus one of these tobacco stocks, you would have a lot more returns. But that's not the point. The point is that you can compare both of these companies side by side. So here is the EPS versus NPE ratio chart for MO, and right next to it you can see EPS and PE for Philip Morris. And it makes it very convenient to compare these two companies and look at the import. Here's the cash and debt. You can see that Philip Morris has a lot of that and Altria has slightly less debt. The revenue, you can see that Philip Morris revenue is growing much faster than Altria. And here's the net income for each company. So you see all the important metrics side by side right next to each other. Their dividends, their EBITDA, capex for each company, outstanding shares, and then this is the recent addition, revenue, and basically other metrics estimated into the future. So the way this chart works is you have existing revenues, and then right next to them go the estimates going forward. So this way you can compare estimates versus the actual revenues for the past and research the company. But again, I actually made this tool. I was trying to compare in my head eBay versus Nvidia. I know they're completely different companies, but then like I keep switching the tabs between the two of them, going back and forth, like, and then I try to remember what was the number for the other stock, and then like, hey, I already actually made this this compare tool. Anyway, guys, so if you want to try this, we'll leave a link in the description and in a pinned comment, 30% lifetime discount. You can try the software for free for 2 weeks. If you don't like it, you can cancel. And if you do like it, we would appreciate that you become a subscriber, part of the family. And another public service announcement, guys, please smash that like button, subscribe to the channel, and we'll see you in the next video.